We've heard a lot of talk about interprovincial trade barriers, suggestions that they cost us tens of billions a year in lost output or as much as 7% of GDP. Our guest says those numbers are exaggerated. We're joined by Marc Lee, senior economist at the Canadian Centre for Policy Alternatives. Marc, great to see you. Your work suggests that a lot of these barriers have been removed and they're not that widespread anyway.
Yeah, I mean, I think we have a lot of hubbub in the media right now and politicians talking about trade barriers. But if you roll back the clock a year ago, no one was talking about these things. That's because to the extent that they existed at all, most of them have been addressed through interprovincial agreements. We had the Agreement on Internal Trade in 1995, and that was superseded by the 2017 Canadian Free Trade Agreement. So, basically we have free trade within Canada. We don't have any customs inspection stations. There's no borders to get across. We all have a common currency, all of the things that are very desirable in an economic union. What there are some differences in regulation amongst the provinces, mostly for environmental protection, consumer protection, other health and safety for workers, that type of thing. So most of these have been put in place for good reasons. And, of course, we don't like excess bureaucracy and paperwork. So if there are simple things to be done to reduce the paperwork burden for businesses, by all means, we should consider those. But I think by and large, these were taken care of many years ago.
I mean, you do hear about some that are absurd, like different rules on packaging for products.
Yeah, I mean, I think there's a few areas that kind of come up regularly when people ask, like, well, what are these actual trade barriers? There's a handful of areas. So alcohol regulations are one. These are an area where these are genuine, bona fide trade barriers because of liquor distribution monopolies in each province that basically dictate what you can have on the shelves. But I would argue that having fully free trade in, beer and wine and spirits is of dubious economic benefit to Canadians and probably won't lead to lower prices. Some of the other areas are almost silly, like a lot of it, there's a whole conversation about trucking regulations and streamlining those, but mostly that's because of differences in geography. In British Columbia, where I live, there are big mountains and valleys that trucks have to go through. So the trucking regulations that make sense in flat Saskatchewan simply don't make sense in British Columbia. So to some extent, those barriers are going to exist. Again, if there's low-hanging fruit here where we can eliminate excess duplication or make things easier, let's do that. But there's nothing fundamentally preventing the vast majority of businesses from trading across the country. If you look at the supermarket chains, if you look at banking, if you look at all of the services and goods that we buy, there's basically no barriers there to be had.
What about restrictions on movement of labor, or people's qualifications don't count in another province, for example?
Yes, so those are not actually trade barriers, but they're differences in labor mobility, largely due to professional associations. Back in the day, a lot of this used to be around accounting because you had CMAs and CGAs and all of these different distinctions. I think they've made a lot of progress in that area. There's still more that can be done, and that's something that I think the provinces can and should be looking at. But these are not really trade barriers in any kind of normal sense of the term.
They are a problem, though. I mean, I know south of the border as well, people are talking about professional bodies trying to maintain a closed shop to keep newcomers out. Sometimes it's immigrants to Canada.
Yeah, I mean, I think when it comes to labor, that's always been the case. When you had the old school craft unions, there was a tendency to protect their own members and to keep other members out. If you restrict the pool of people who are part of the association, it tends to mean higher wages and salaries for your workers. We have a similar analogous issue when medical professionals from overseas come and want to work in Canada and can't immediately immediately get qualified to work as nurses or doctors or that sort of thing. So there's similar issues there. I think there's a work program that could be had there. But in terms of like actual barriers to trade, which is what the conversation is supposed to be about, a lot of this is really hypothesized barriers based on extreme assumptions made in sort of economic models, as opposed to sort of an actual practical list of concerns that businesses had, and that could be a work program for provincial governments.
Now, so we do get these figures, though, $200 billion, et cetera. And economists are always going to argue, but you say some of the methodologies used there, I think you say that we get complicated exercises in abstraction and dense mathematics to justify these claims, but you think that they are exaggerated.
Yeah, I mean, so a number of those estimates come from the same modeling exercise conducted at the University of Calgary. They don't actually go about measuring trade barriers, in fact. What they do is they make a bunch of assumptions that, if there was no trade or transportation costs associated with trade, then any differences in what provinces buy relative to each other must be due to these invisible trade barriers. But in reality, there's huge differences in what provinces produce and consume, largely because, British Columbia is specialized in mining and forestry and oil and gas. Saskatchewan has grains and potash. I mean, there are major differences in the structure of the economies across the country. So to just assume that any differences across those countries are due to trade barriers, as opposed to just simply differences in geography and industrial structure, is going to overstate those cases. The other thing those studies do is they take estimates of the cost of trade barriers from international trade literature, from, let's say, Canada-US trade, and then try to apply those large cost numbers to interprovincial trade. And that doesn't make any sense, because we know that people tend to trade within Canada with other provinces much more so than they are likely to with the United States. And even, Canadian provinces to other Canadian provinces trade more with each other than US states trade with each other.
Marc, thank you very much indeed. Marc
Thanks,
Lee, senior economist.